Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 25th of August, 2017, and the market closed with pretty much broad-based gains here, with the S&P 500, the Nasdaq, the Russell, the biotechs all higher. The U.S. Oil Fund, USO, was down 2%, and the dollar was down 2% as well, but across the board, pretty much positive. So we ended last week, of course, down in this area, and we were, kind of oversold and due for a bounce after hitting the measured move objective that we spoke about last week that brought us right in here. So we got a bounce. We're right at that 50-day moving average, and we've got a declining 20-day moving average. So going into next week on the daily time frame, we still show a little bit of indecision here, but backing it up a little bit, there's talk about, of course, the trend line from the beginning of this year, which is showing a little bit of, being tested and broken in here. But, keep in mind, we're still in a much bigger uptrend. We've got a rising 100, 150, and 200-day moving average. So let's take a look at the shorter term time frame, and we'll start out with a 30-minute time frame. Each candle represents 30 minutes, and the orange moving average I have across different time frames is a 5-day moving average based on intraday calculations. It's not a daily calculation, but based on the intraday action. Anyways, as we said, we hit that measured move objective and it broke the trend line, but bounced here this week. And where we ended up showing a little bit of selling was a level that I had pointed out, and I believe it was Monday evening, that we had the volume weighted average price from this gap higher, which is acting as resistance. And we also saw that from the most recent leg lower to right in here, we came up to the 61.8% retracement. So we did back off that level, but looking at a shorter term time frame, what we have here is a little bit of reason to be positive. That is, we have a rising 5-day moving average, which we held above. I had identified 243.75 to 244 as the key level of support, and it hit 243.75 exactly. So for next week, for the buyers to regain the momentum, I think you're going to have to see it at least back above this little band of resistance, and backing it up to, let's go to, well, I guess this 65-minute time frame. You can see that even breaking beyond that, we have a trend line here that is, potentially, in that same area for resistance. So if we're going to see strength, it might develop something like this. But then, of course, we have to be aware that we have the potential for resistance up in here. Now, the bigger picture, of course, is still bullish. So we're going to overall give the benefit of the doubt to the buyers. But, the indecision here of the last couple weeks is showing that this market needs to at least consolidate through time before the bigger uptrend can continue. For the Nasdaq, we saw kind of the same thing. The volume weighted average price from this peak and from this low acted as a support area, also found right at that 5-day moving average. We closed a little bit weaker in the Nasdaq, so that's something to be aware of, that if we break below this week's or Thursday's low and hold below there for more than a half hour or so, it might lead to a little bit more aggressive selling. But on a positive note, on the daily time frame, we closed above that rising 50-day moving average, and what looks like the most relevant trend line would bring us somewhere down towards 140 if we do continue lower. So right now, I'm really looking at this as overall still bullish, correcting more through time than price, but we have to be aware of the risk in each individual stock that we trade, rather than just blindly saying, hey, we're in a downtrend or in an uptrend. It's always specific to each individual stock. On a positive note, for the Russell 2000, we did get back above and hold above on a closing basis from the volume weighted average price since the election that we've been talking about. And it's still not a bullish looking market. We have a declining 10, 20, and 50-day moving average. I actually correct myself there. The 10-day is rising a little bit, but this is not the best looking market. We're below the 200-day moving average, and that 200-day moving average is flattening out. So we still have to be aware that this market has the potential to have a bigger impact on the broader market, and this is the band of support in here that we really want to see continue to be held. 130, 275 to, let's say, 133.50. I think that, if we were to come down into that level next week, I don't think it would break immediately, but it is something to be aware of, and certainly gives us reason for continued caution in terms of the Russell 2000. The semiconductors kind of correcting through time as well, just going sideways in here. Nothing really much to report there. The biotechs, however, this group actually showed some good signs here this week, and that is that the volume weighted average price since the shakeout, let's just review that real quickly. And what I'll do is I'll go to a chart here, this daily chart, which is clean. It doesn't have anything on it. But what we saw earlier this year was a break of the year-to-date volume weighted average price. After that, we came down precisely to the volume weighted average price from the election, and that's where we saw that bounce. So what we have been doing is measuring risk forward from that point. So what I'm talking about is adding a volume weighted average price from that shakeout low, and over the last couple weeks we've seen that that level has been resistance. Well, we got back above it on Thursday, and today we continued a little bit higher, and as I pointed out to Alpha Trend subscribers on Thursday evening, what I thought was going to be the likely scenario actually ended up pretty much happening precisely, which is the volume weighted average price from the peak. I thought that we were going to see it come up to that and then pull back down into this level here. So next week, I think that we have a strong possibility that this market could continue to turn back higher. The key will be that we hold above probably about 308.50-ish. If we hold above 308.50, we want to be giving the benefit of the doubt to the buyers in the intermediate term trend for the biotechs. And of course, when we back it up to a weekly time frame, you can see here that this is all coming together at a prior important level of resistance. So resistance broken tends to act as support. That's exactly what we're seeing here, that the buyers are showing up where they're supposed to be found. And now, as I said, it'll be key for this group to hold above 308 or so. If it can do that, I think you can expect to see higher prices once we overtake the volume weighted average price and from that peak, and it might end up doing something that looks like this and then be able to continue to move higher. So that's clearly a group that you want to keep a closer eye on next week. As far as individual stocks go, I think that Baidu is something that's setting up nicely here since they had this big break higher, and what we saw in there was that it broke this triangle here on a weekly time frame. A lot of pent-up energy. It broke beyond that, and it's really holding on to those gains well. So if you look at the 65-minute time frame, you can see I've already drawn in the volume weighted average price since that gap. Now, we've had it kind of crossing back and forth, but the key right now is that we have at this point a rising 5-day moving average. So if we can retake this level at about 230, I think that with a stop down near about maybe 224, that you should expect to see that Baidu will be able to continue to move higher, and perhaps heading up towards the all-time highs here sometime in the next, let's say, month or so. That's all I'm going to share with you right now. Actually, let me show you one stock I think looks vulnerable, and that's Dunkin Donuts. I actually have a small short exposure in this one, but it's on the edge of basically a cliff in here, and it's looking more and more like this stock is ready to get hit pretty hard. It's stuck below the year-to-date volume weighted average price. It's below a 10, 20, and 50-day moving average, and it's also below the 40-week or 200-day moving average. So this is a good one to keep an eye on for downside next week. We can see on a 65-minute time frame, it's a pretty choppy stock, and I think that you would have to consider it guilty till proven innocent, really, as long as it's below about $54 a share.